Welcome to Money Making Sense, the show that talks about all things money. This is the start of our tax tip series, 10 tax tips, and we're going to need them. Everybody's starting to file their taxes right about now if they haven't already. I think January 30th was the first day people are allowed to send in taxes. And I have joining me Becky Schreyer. You are a partner at Stainer Bates PC. Welcome to the show, Becky.
Thank you. Glad to be here.
So you are going to talk to us all about why it's important that we probably need to see a CPA, especially if we have more advanced issues. And for myself, I've got 401ks and IRAs, and I'm divesting in all these places, and I've had several jobs, and some of them are out of state, and I can't figure out how to reconcile all my W-2s that are coming in. So I definitely want to go to you, at least to a CPA, a certified public accountant.
Thank you.
The other reason I want to is, when I get numbers, if I see numbers in front of me, I just start pouring wine. And you know what? By the time I get to my third or fourth glass, I kind of start transposing numbers. And then, the IRS comes back at me and says, why do you think you get $20,000 back on your taxes? So that's really bad. So, Becky, talk to me about what are some of the really important reasons why we should go to a certified public accountant?
As a certified public accountant, we do a lot of training, not only when we begin the profession in school, and we have to have a master's degree to even sit for the CPA exam, but after and as we go, we have to have 40 hours of continuing education every year just to maintain our license. And included in that is going to be all the changes. So the most recent, the tax reform that we just went through, which is very complicated to the point that we've had numerous training sessions on it already to understand exactly how the changes flow through to the tax return and impact you.
Okay, so my understanding is the tax reforms that just took place in December of 2017, that won't actually impact my return that I'm filing right now that much.
That's correct.
But we need to start right now figuring out how those tax changes are going to affect us for this year.
Correct.
For the taxes that we file in 2019.
Correct, which will be for the tax year 2018. Correct.
Okay. So what are some of the biggest changes that you know of?
That just came through? Well, the biggest have to do with corporate taxes, dropping the tax to 21%. But the ones that impact personal are those that go through what they call flow-through businesses. So many, many people out there do not have a C corporation they're working with. They have an S corporation, right, or an LLC or another type of partnership. And what that does is that income then is calculated and they file a return and give you a K-1. According to the new tax law, something that we don't even have exactly how it works yet is a 20% deduction. It's a below-the-line deduction, which means it doesn't reduce your adjusted gross income, but it's still a deduction from income, which is huge. And it will be, the calculation of that and what you're allowed to have and not have is what you're planning for right now as you guide that business.
Okay. Well, so that's things that we do definitely want to plan for starting right away.
Right.
But I'm filing my taxes for 2017. So what can you do to help me? Why should I come to you, Becky, with all of my various issues? How are you going to help me get the most money back on my taxes?
By knowing what your dependents will get you, what your children, because the tax law that went through is for 2018, it's true, but we still have in 2017 many different items that you're dealing with. So you're looking at dependents, you're looking at education credits, you're looking at child care tax credits, you're looking at if you have a Schedule C business that is a sole proprietorship. If you're selling things online, a lot of people don't have anything organized other than they're doing it as a sole proprietor. Then you need to know what you can deduct, what you can't deduct, and what you have to capitalize and depreciate.
So my candle business that I run out of my back bedroom, and I do ship a lot online, and sometimes I'll waive the shipping, things like that for the person buying. But can I write that off? Like, if I pay for the shipping myself because I waived it to somebody who bought, can I write that off on my taxes?
Correct. And how that works is when you charge them for shipping, then you take the income and set it against your shipping costs.
Okay.
So that nets. But when you waive it, then that shipping cost is still a deduction and there's nothing that offsets it. So it's treated as a deduction.
Okay, what if I didn't keep any of those records of who I shipped to, and I'm just going, oh, I spent $1,000 on shipping last year. Can I just write that off?
You can write that off and you might be okay, but if they ever come back and audit you, then if you don't have something proving that you actually paid that, they will not allow you to take it. So you want to keep track of your business expenses and you want to keep those receipts because what they check for when they look at that receipt is the date and who it was to and from so that they can see that it really wasn't just some personal item that you ordered and kept.
Okay. And what are some other things that I could write off just for me personally if I needed to buy something for my business, or even if it's not my own personal business, maybe I go to a job, but I bought items for that job. What can I write off?
Currently, for 2017, you can write that off as an itemized deduction if it's for your job. If it's for your business, you can write it off no matter what, and you can write it off in 2018. But in 2017, it is considered an employee business expense, and you can write it off as a Schedule A itemized deduction. There is a small limit on that. It takes 2% of your adjusted gross income and subtracts it for when you paid out. And the excess is what you can write off as an itemized deduction.
Okay, so let's say I made $30,000 last year. If I bought enough items that equaled 2% of that $30,000, 2% or more,
and
of
exceeded
it, then I can write it off.
You can write off the excess. Over the 2%.
Over the so I have to spend at least 2%, and then anything over that's why I need to go to a CPA, because I would have just been like, woohoo, I can write 2% off my taxes. So what happens if I do that?
Well, you never know. But my guess is you'll be questioned.
They're like, no, I don't think so. Okay. No. So what is the difference between a CPA and a tax preparer? Like I hear about H&R Block, and there are several others, which right at the moment I've had too much wine and I can't remember all their names. But what's the difference between a CPA and a tax preparer?
Well, and I think there are tax preparers that aren't even necessarily those big box companies. But a CPA has specific training. And, like even our staff are CPAs that are, preparing and learning and growing, where the staff at H&R Block, many times the owners might be a CPA. I don't know that for sure. You never know that.
Right.
But rarely are the preparers. And the preparers that you go to are, following a kind of a routine. They usually take simpler clients. I've rarely had a good experience with them when they've got a very complicated business return. I don't know if they even prepare business returns, but they will take a K-1 and put it on an individual return.
Okay.
So the biggest difference is really just level of skill and understanding of the tax code and how it applies to us, even individually, even though we do both businesses and individuals.
Okay. What else do we need to know about why it's the best thing for us to do is go to a certified public accountant for our taxes?
I think, there's not going to be anything like a guarantee that everything, you have everything from any certain because we are all individuals and mistakes are made and we all get that. But I think as a general rule, when you go to a CPA firm and you work, or even sole proprietor CPAs, there is usually a level of review. So there's a prep level, there's a review level, and it goes out after it's met the criteria for both of those.
And if a mistake was made for some reason, I mean, it could have been a typo or just there was some, just simple mistake, but the IRS comes back, I can point my finger at you and go get Becky.
Yeah. Well, you can't, because the IRS will still hold you responsible. But we will back up what we did.
Okay.
And if we made the error, we usually will pay, not necessarily the tax assessed difference, but any penalties or interest that are assessed to cover that mistake.
Okay. So how much in general do you know? I don't know if you have this number, but there's usually a fee associated with going to a certified public accountant. How much is that just sort of on average?
Boy, that's a really hard question because every return is so different. I have had clients come that have just had it prepared at some of the bigger bucks, and we are very competitive with that, which surprised me, to be honest, because I've usually said I'm not in competition with that because it's perhaps a simpler return. But I found that we actually are very competitive. A very simple basic return is still going to probably cost somewhere between $250 and $300.
But the plus side of that, so yes, I may have to pay you $250 or $300, but chances are you are going to find those deductions that will save me more than that $300.
Yeah.
So if I just done it myself or gone to a tax preparer, especially a tax preparer, I might still be out the $300 going to them, but they wouldn't have found as many deductions as you possibly could find.
There's definitely a possibility of that. It depends on how complicated your return is, because there's not a whole lot of room with just a W-2, an itemized deductions, although there's lots of room when you start adding in tuition credits and different ways to claim that credit. So there's definitely a possibility that we will find all that. If we don't find it, then and find out later, we'll file an amended return for free and get it back.
Okay. Well, thank you so much, Becky Schreyer. You are a partner at Stainer Bates PC, and definitely come to you because, like I said, I drink the wine. I don't really do well on those taxes. So. All right, everybody. Go to uacpa.org to find a CPA that's right for you and get the most out of your income tax preparation when you hire a CPA. That's uacpa.org. Thank you so much for listening to Money Making Sense, the Tax Tip Series.
Thanks for being a Money Making Sense listener. Follow your common sense onto social media. Money Making Sense on Facebook, Twitter, and Instagram.